In this video, I'm going to teach you quickly how you can use your home's equity, that's some of the value in your house that hasn't been used, to pay off your bills, maybe eliminate your mortgage payment, maybe even build a big old retirement safety net. And the bottom line is, if you do this the right way, you're going to live a more comfortable and a more stable retirement. So if you're into that, then stick around. This will be a short one, but I'll give you some pointers and I'll show you how to do it. First of all, my name's Jason Eichmiller, and I own this channel, Reverse Mortgage Reality, and I've really helped over the past 17 years. I helped a little bit over 460 seniors and their family members learn about and get reverse mortgages. So, first of all, let's go into exactly what a reverse mortgage is. Now, you may have heard some crazy myths like the kids don't get the house, or the bank will come, or your spouse won't get the house. That stuff is all not true. Suffice it to say, well, I'll explain what a reverse mortgage is, and then you'll understand why the myths aren't true. So first of all, a reverse mortgage is just a regular old mortgage. People overcomplicate it all the time, but in the end, it's just a mortgage. What we're doing is we're giving you some of your home's value in tax-free cash based on your age without forcing you to make monthly payments. If you get a regular mortgage or a home equity line of credit, it's great while you're working. Yes, you're forced to make monthly payments, but you're working and you're making a lot of money, so it's normally okay. But when you go into retirement, you understand that your income is kind of constricted. No longer are you working 40 hours. Now you're on fixed income. Maybe you're drawing down on your retirements. So it really, and by the way, I do regular mortgages and I do HELOCs. And I've found very, very few circumstances where a regular mortgage or a HELOC would make sense for a senior because, again, when you're on fixed income, you're basically, if you're being required to make a monthly payment, it's almost like you're robbing Peter to pay Paul. You need money, we need to improve your cash flow, or we need to build you that retirement safety net, and we can't impede your cash flow. We can't force you to make these mortgage payments month after month because that'll make things a lot tougher for you. Okay, so back to what a reverse mortgage is. I digress a lot. If you've watched my videos, you understand that I can kind of go on tangents a little bit, but I hope that makes sense. So again, we're giving you some of your home's value based on your age. The older you are, the more money you get. The younger you are, the less money you get. Because it's just a mortgage, remember? Because you're not being required to make monthly payments, right? But it is a mortgage. You still have ownership of the home. You keep the house. You have full control. If you want to make a payment or two, go ahead. If you want to make payments every single month, go ahead. It's pretty rare though, most people don't. When you pass away, if your spouse is on the house, and this is one of the myths about reverse mortgages is that a spouse lost the house after the other spouse died. Well, I could spend a lot of time and explain why that's not true, and a couple circumstances where reverse mortgages that were taken out 20 and 30 years ago, occasionally that happened. But now, if you have a spouse, a husband or wife, who lives in the home with you, they're called, this is a vocabulary word, but they're called an eligible non-borrowing spouse, which means that if you pass away, they can live in the house for the rest of their lives. And as long as they do live in the house and they pay their property taxes and their homeowner's insurance and their HOA if there is one, just like you're supposed to do as a homeowner, then there's no reverse mortgage police that can ever come over and say, hey, we want our money back. So what happens here? Just like a regular mortgage, if you pay it off, if you sell the house, well, whatever's owed gets paid back and you get the rest. And if you live in the house for the rest of your life, then the house will go to whoever you want it to go to. Maybe it's your kids. Maybe you don't have kids. Maybe it's going to the church. Wherever you want it to go, they'll get the house. And then just like a regular mortgage, remember, this is just a mortgage. Just like a regular mortgage, whatever's owed will get paid back. And normally your kids will either refinance it if they want to keep it, or more likely they'll just sell it. Whatever's owed gets paid back through the sale, and your kids get the rest. So Now we're going down the line of what a reverse mortgage is, right? I hope this makes sense so far. If it doesn't, by the way, go ahead and you can write your questions below in this video, or you can reach out to me. Again, my name's Jason Eichmiller. You can reach out to me at jason@keyhomelending.com. You can give me a ring at 888-309-9705, or you can go to www.reversequotes.com. Either way, you can get in touch and I'll do my best to answer your questions specifically. Okay, so now we know that you own the house and you stay on title. The older you are, the more money you get. The younger you are, the less money that you get. And that when we give you money, we're not requiring you to make monthly payments. Now, let's get into the very beginning of this video where I said, hey, reverse mortgages are gonna help you either improve your cash flow or help you build a retirement safety net. Let's talk about the cash flow first, okay? Let's say, you know what, we'll talk about my client, Dave. Dave, I'm gonna pick on you for a second. So Dave is in his early 70s. He's on fixed income. He had has an $800,000 house and he owed $250,000 on his mortgage. Well, his mortgage payment plus all those credit cards, man, Dave was taking it, the mortgage payment, the credit cards, his grocery bill. You know how costs are going up, right? Gas is more expensive, milk's more expensive, eggs are more expensive, everything's more expensive. So all of his bills together were taking more than his monthly fixed income check. So what was Dave doing? How was he kind of bridging the gap? Well, he had a little bit of a piggy bank that he was taking money from. So every single month he would take out of his little bit of savings and investments to stay afloat. But that wasn't gonna last forever. And in fact, the reason why Dave got in touch with me is he said that, hey man, I'm not drowning tomorrow, but I can see that I'm slowly bleeding out. What can you do to help? So what we were able to do for Dave is we were able to use a reverse to pay off his mortgage and then give him the cash to pay off his credit cards. Just by doing those things, he goes from being in the red every single month and just draining out his piggy bank to being far in the black and actually having a little bit of surplus money so he can enjoy himself. Dave likes going out to dinners with his friends, and every few weeks or so, they've got a monthly poker game. They have a poker game, and Dave enjoys that sort of stuff, but he was feeling really cramped again because he had no excess money. In fact, he was in the red. Now Dave can enjoy himself. He can do the things that he wants to do. So I'm so happy for my man, Dave. You know who you are. I appreciate you trusting me to help you out, and I'm so glad that now you're living comfortably for the rest of your life. Okay, that was Dave's story. That's all about reverses helping you with your cash flow issues. But there's some folks who don't really have cash flow issues. They don't have a mortgage, but they're really worried that they don't have enough retirement savings. So we'll talk about Candace. Candace is great. She's in her mid-60s. Unfortunately, her husband passed away. He didn't leave her many bills though. She's got a $1.2 million house, no mortgage payment at all. But she just didn't have anything to fall back on. And in Candace's, I want to keep this high level. I don't want to share too much about it, but Candace's family has they had some health issues. Her mom had a rough time as she aged, and Candace wanted to protect herself against the same thing. So she doesn't have any long-term care insurance. She doesn't have any other insurance. And she's just worried. When she came to me, she said, I don't want to be like mom. I don't want to be stuck in a nursing home. If I get sick, I want to stay in my home for as long as possible. And God willing, I want to die in my home. Now she's in her 60s, and she's healthy right now. She's like, Candace is okay right now, but Candace was really looking towards her future. So what we did for her, remember, we didn't have anything to pay off, but with her house worth over $1 million, we were able to build her a substantial reverse mortgage line of credit. Now that line of credit, I'm not gonna go too deep into it right now. I've got other videos. So if you'd like to see the reverse mortgage line of credit video, go ahead and comment below, or you can reach out to me. But the reverse mortgage line of credit it's going to allow her, it basically gives her this big old line of credit that actually grows tax-free over the years. So I believe it started about $350,000, and it's growing at about 7% every single year. Now she doesn't want to touch it, and she doesn't need to touch it right now. So she's going to let it stay in that line of credit and build and build and build and build. And if she ever needs it in her mid-80s, that's when it's going to be a heck of a lot more money than it was now. Now, I'll teach you something about the rule of 72, and you might be thinking, like, why are we bringing math in? Why are we bringing the rule of 72 into this? But basically, the rule of 72 means that you divide 72 by whatever the interest rate is, and that's how long it takes for something to double. So with her line of credit, the rate's about 7%, so this isn't going to be a perfect number, but if you divide 72 by 7, you get, what, a little bit over 10. So that means every 10, I'll just push it to 11, every 11 years, her line of credit's going to double and double and double. But let's just take her till her mid-80s. That means her line of credit has already doubled twice. And guess what? By doubling twice, that means that she will have, again, if she doesn't touch it, and if she needs to touch it before then, it's perfectly okay. She's going to have a lot of money in there. But by her mid-80s, she's going to have over $1 million in her reverse mortgage line of credit. Now, it's not being charged any interest till she takes it. Net growth, again, if she takes the $1 million or part of it, she's not being taxed on any of it. And the other thing that differentiates the reverse mortgage line of credit, now I kind of am going deeper into the reverse mortgage, into this line of credit, but I think it's important, especially if you're kind of in similar shoes to Candace. But the other thing that's really great about it is that with traditional lines of credit, and I know this because I help people with them if they're still working, but traditional lines of credit are only good for 10 years, sometimes 5, sometimes 15 years. This reverse mortgage line of credit will last for your entire life. No matter how long you live, as long as you live in your home and you keep it as your primary residence, you're going to have that reverse mortgage line of credit behind you growing and growing and growing. It is absolutely, and these reasons, and I can go on and on with other client examples, I just wanted to give you a couple of them, but those are 2 reasons why some very prominent financial advisors, long time back, they called the reverse mortgage the Swiss Army knife of retirement, and I hope that makes sense. So, if you want to learn about does a reverse mortgage work for you? Can you qualify? What are your options? And then if you can qualify, what's the absolute smartest way to use it so that you can use your home to live the very best retirement that you can possibly live? Then give me a shout. Again, my name's Jason Eichmiller. Been doing this since 2008, so that's about 17 years. And my phone number, I'll give you my contact info. My phone number is 888-309-9705. You can get me directly. If you want to email me with any questions or to set up a time, you can email me at jason@keyhomelending.com. And if you want to go to our website, you can check it out. You can put in your information and we can pick a time to talk. Also, you can see some of my recent client testimonial letters as well. You can go to www.reversequotes.com, whatever you're more comfortable with. But however you reach out, if you do, I will personally do my very, very best to help you, just like we helped Candace, just like we helped so many of the other folks over the years. All right, thanks so much for your attention. I hope this wasn't too long, but I really wanted to share this with you because this might make a difference in your life, in your retirement. All right, take care of yourself and hope to speak soon.